The most interesting situation to observe right now is not in the stock market, not in oil, not in crypto, it's gold. Gold has sold off significantly in the past days and reached my first price target to the penny. So what do we need to look at now? I give you the 3 factors you need to pay attention to judge where gold is going next. Let's talk about it.
Welcome to Hot Trades of the Day, your show for swing trading ideas for the coming days, weeks and month.
So welcome to today's show. Greetings from Dubai. As you know, I'm in Dubai here at the Token 2049. It's a crypto conference. If you want to be ahead of the markets, you have to go with the times and you always have to look at what is going on. And it was a gigantic event, as you can see, 50,000 people in attendance, 5,000 people waiting line. But crypto is really not important to what we're talking about right now. We're talking about gold. So this is the gold chart. I've been warning you that a correction is coming for weeks. And I've been giving you the levels to look at. And the level I told you was this lower end of this support channel purple and the neckline of the head and shoulders that you could see, and we're the first ones to point this out on this channel here when you would look at the hourly. So let me zoom out so you see it. And there you see the shoulder, head, shoulder. Right? It clearly, you can see it very clearly, and you see the neckline. And I told you, if we break the neckline, that is the bear signal. Everything else is just consolidation. The target zone, because the first time I talked about it was, I think, around here, would be the support zone and the test of the neckline. Look what has happened. We tested the neckline, the support line to the penny, and as you can see on the hourly, held up great. So that's the situation with gold. So this is what we're looking at. So today's positive day is not surprising after yesterday's sell-off. The most important signal from yesterday, again, was we held the most important zone. So what happens now? Right now, we are in one of the most difficult situations for traders. Why is that? Well, we get a short signal if we break below this support zone here of the neckline from the head and shoulders and the lower end of the support area. Then the next target would be this zone right here, around 3,125 to 30. But really, we break below, we're likely going to test this area, right? Which is around 3,050. Or we go bullish, but we're only going to go bullish once we break this zone up here. So anything in between here is just chop and directionless price jumps that are not tradable really for us and not that attractive. We're not even talking about $100 in gold. So we need to be patient, which is one of the key characteristics of a successful swing trader and not something that people are very good at. So we need to pay attention to the signals that the gold chart is going to give us. Break down or break out up. And this is, again, if we go over 33.50. Second thing we need to look at is the dollar. I told you it all goes with the dollar. Look at this. The second the dollar finally found some strength again, right? That's when we topped out with gold. All right? You can see it right here. Look. 17, we had this last blow off top right here. On the 22nd, we have been in correction. We look at the Dixie, which is a dollar against the currency basket. You see 21, 22, just when we had the blow off in gold. That's where we had the low in the Dixie. We've been going up in the Dixie. We've been going down in gold. So we need to take a look at the dollar and what the dollar is doing. It's fine, right? We're seeing it's making higher lows, it's making higher highs, but we also see there's no dynamic in the dollar. You would think if you have a sell-off like this, I mean, look at this. From March 3rd to, in basically 2 months, we went from 107.50 all the way down to 98 in 2 months. That's a giant move for currency. And this is the reaction we get? That is really nothing. But you know, we're moving ahead. It's very clear what needs to happen, right? We need to break above this zone right here for the dollar to get any dynamic and basically complete a short-term bottom. And we're working on it. The dollar is working on it. Will it happen? I don't know, but that's what we need to look at. If the dollar breaks above this zone, this resistance right here, we're probably going to get a quicker, bigger move in the dollar, and that could push gold lower. Second thing we need to look at, or third thing, because first thing is the gold chart, second thing is the dollar, and the third chart is obviously risk assets. What's the number one risk asset? Well, the number one risk asset is crypto, but in the markets on Wall Street, it's tech stocks. And this is the NASDAQ 100, and as you can see, I told you this before. Remember, on Monday I told you NASDAQ looking good. Risk stocks are coming back. And this has only improved. Look at this. We are now at a point, we've reached a point, we are above where the market was before the tariff chaos unraveled, which is this major move right here. We're now back above it. We have to take this into account and say risk assets are back. The investors are willing to take on higher risk. Uncertainty is clearly going out of the market. We are making higher lows. We are making higher highs in the NASDAQ 100. Some of the Max 7 stocks starting to look really good. We got the numbers out. Pretty good all around. But keep in mind, this is only till March, right? The tariff chaos not in there. So this, if this continues, and we look at the performance of Bitcoin and the cryptos, which are the most riskiest thing on the risk curve there is, support that risk is coming back into the market, then that will take money out of gold, because gold had a lot of inflows when the uncertainty was high and was the safe haven. So what does that mean for us? First thing I told you, we're not trading anything in gold right now, right? Why? Because we're in between signals, we're in a chop area. So I've been telling you before, we want to take a look at the mining stocks and use the weakness to buy mining stocks. This is a GDXJ for the junior miners. And as you can see, it corrected big time, really, and hit this support zone now. Used to be resistance, now support. Basically, all this looks like an island reversal. I would really like to see GDXJ test this upper end of this now support, form a resistance zone, because if we zoom out, then you can see this is a big zone, right? This is the zone that the GDXJ has been below since 2013. and we're breaking above it. And what you usually see is a retest, and then we're off to the races. And that would be ideal, right? This would be textbook. Now, do we always get what we want at the markets? Not at all. But this is what I was looking at. If we get weakness in gold, then it'll drag down the GDXJ at least to this area. So I want to do my homework, right? Do my analysis on some of the gold stocks that are getting sold off. Even worse, the GDX, the senior miners. That one looks even worse, as you can see, right? We broke above this new long-term uptrend channel, and now we fell back into it. What are the zones we need to look at? It's this blue support zone that goes all the way back to the highs of 2020. That's a big one. And then obviously on a shorter time frame, we have this zone right here. These are the highs from October 24 last fall, before we had the big correction with a year-end sell-off. So there's some room, there's some room left here for the GDXJ to correct. And we like this because this will give us the chance to invest and put swing trading positions, whatever we want to do, on the long side on some of the most interesting miners. That's it for today. Have a great weekend. Talk to you later. Bye-bye.